South African route, where you can impose draconian...
The Uganda shilling is not yet in any safe waters against depreciation, especially with the US dollar, according to Citibank Africa chief economist.
The Bank of Uganda hopefully has learnt the lesson and will react sooner, but I don't think that it can deny the underlying fundamentals of the shilling having to go weaker next year. But it won't be a straight line. It will be in this sort of step that you see, I suspect. Right now, whether you think overall that leads to shilling weakness of 5% or whether it leads to shilling weakness that I have of 7 or 8%, that you can argue all you like, right? But I do think we have to bear in mind the possibility that these will happen. If you wanted to predict another one, it may be at the start of next year, January, February, sometimes you can see rising demand. Maybe we should look at June again and think that there might be a similar pattern if some of these factors re-exist in June. Is that we have Ugandan shilling, well, I have it going to over 4,000 eventually over the course of 2019. If you actually look at the market forecast, the consensus forecast is that it doesn't actually break 4,000 by the end of next year.
On inflation, he warns that too may rise, especially as importation rises with a weaker shilling.
Growth has picked up. It looks like it's going to be relatively broad-based, but it won't pick up. Inflation has been low, but will pick up. Rates will go up. The twin fiscal and current account deficits have been within acceptable limits, but business confidence is low. That could be your problem next year.